As Bitcoin has taken a tumble recently and is currently down roughly 10% over the past month, Michael Saylor's strategy, formerly Microstrategy, finds itself in the middle of a peculiar problem.
Houston, we have a problem.
Strategy's total Bitcoin holdings amount to $55.9 billion at the time of recording. The problem is Strategy's share price has tumbled as well, down over 50% the past 6 months, and their market cap is now less than their Bitcoin holdings at $49.3 billion. Given this new reality, what investor would want to buy Strategy stock to gain exposure to Bitcoin when they could just straight up buy Bitcoin itself? Not only that, but Morgan Stanley Capital International, or MSCI, is set to decide in January if companies whose business model is to buy cryptocurrencies and resemble an investment fund rather than a normal company will be allowed to continue to trade on their indices. Strategy falls under this category according to MSCI, and if MSCI and its funds who have over $18.3 trillion in assets under management decide to stop investing in these type of companies, then some of the largest index funds in the world will be forced to sell Strategy. JP Morgan estimates this could result in as much as $8.8 billion of outflows, which would cause Strategy stock to pummel even further.
I'm sorry, Mr. Whitaker, I couldn't hear you. What did you say?
I said, God help me.
My name is Jack, and thank you for watching Peak Productions, the #1 place to stay up to date on all things business, finance, and technology. Strategy is currently the largest corporate holder of Bitcoin, and the second largest Bitcoin holder in the entire world behind just Satoshi Nakamoto, the mysterious creator of Bitcoin, who is rumored to own over 1.1 million Bitcoin across a number of wallets. The software company that has more or less turned into a Bitcoin treasury owns around 650,000 Bitcoin at an average price of $74,436. Founder and former CEO Michael Saylor, who is now the executive chairman of the company, has long preached about buying and holding Bitcoin at all costs. Here's a tweet of Saylor advocating investors to sell their kidney rather than sell their Bitcoin.
I beg your pardon?
Saylor also constantly posts AI slot pictures advocating for Bitcoin, including my personal favorite post of his in the midst of the recent Bitcoin sell-off where he generated a picture of him holding onto a life raft while the boat is sinking behind him. People were quick to realize that it seemed like the boat sinking behind him was the price of Bitcoin and that he had seemingly abandoned ship. Given how bullish Saylor is on Bitcoin, you can imagine how stunned investors were when he and Strategy's CEO revealed that they would be open to selling Bitcoin if they had to. For context, the company has not sold a single Bitcoin since establishing its Bitcoin treasury in August 2020. Additionally, after Strategy announced they sold $1.44 billion worth of stock not to buy Bitcoin like they had been doing, but rather simply to fund interest and dividend payments over the next year or so, investors got very cold feet. Peter Schiff was particularly upset, tweeting, "Today is the beginning of the end of MicroStrategy. This stock is broken, the business model is a fraud, and Michael Saylor is the biggest conman on Wall Street."
Damn!
You see, Strategy's cycle of selling debt to get capital to buy Bitcoin worked because the stock was constantly appreciating, because investors were attracted to Strategy's growing Bitcoin hoard as Bitcoin continued soaring in price. But now that Bitcoin has tumbled, so has Strategy's valuation, which in turn has turned away potential investors. Investors used to be attracted to the stock because they would get Bitcoin exposure as well as gains from Strategy's stock as it continued to rise. But now, there's no point in even taking the risk of investing in Strategy when you can just buy Bitcoin straight up if you're looking for Bitcoin exposure. And like I mentioned in the intro, the strategy could potentially get a lot worse for Saylor and Strategy. In mid-January, MSCI will make a decision on whether or not to allow companies that they perceive as investment funds rather than actual companies, such as Strategy, to continue to be owned by their index funds. MSCI owns and operates some of the largest funds not only in the US but around the world, and their decision to bar Strategy from being held by their funds could force up to $8.8 billion worth of shares to be liquidated all at once. Given how prevalent MSCI and their funds are, their decision will also most likely set an industry standard. Saylor's pretending that he's not worried about this, yet it's been confirmed that he's talking with MSCI behind closed doors, most likely begging them to not kick his company off their indices. It will be very interesting to see what MSCI's decision is and if Strategy will be able to survive in the long run. Leave a like if you enjoyed and don't forget to subscribe to stay up to date on all things business, finance, and technology.